Welcome to On Tilt Trading. I am currently long in Bitcoin. I'll walk you through what I have trading top down. So here on the 4-hour chart, you can see that Bitcoin has been delivering to the sell side here. Bitcoin up here wicked through the previous week's high. So this is the previous week. Anything to the left of this orange line. So you can see here it wicked above, then sell side delivery, and then this is the low of last week. So this sell side liquidity was swept out of the market here, and now Bitcoin has returned to the buy side, putting in a bullish FVG here on the 4-hour. Then here on the 60-minute. Here at the New York Open, we get this price action. This is the opening candle, and then this second candle here wicks below it. So this is going to give me a long bias coming in to this trade, and ideally I want to take profits here at the high of the opening candle here of this session. But I decided after this candle closed here, it closed above. This creates a break of structure here on the 60-minute. So this would show a likelihood of price wanting to continue to deliver to the buy side. So instead of taking profits here at the high of, let's say, candle 1, once it was breached here in candle 3, so let's call it candle, here is candle 1, here is candle 2, and here is candle 3. Actually making a mess of that. Here is candle 1, here is candle 2, and here is candle 3. So ideally taking profits here at candle 3 at the high of candle 1, but I mentioned the breakup structure. So I'm going to hold here and see if price will deliver a little higher to here. There's going to be sell side liquidity resting here, which is the high, or which is yesterday's high. So targeting yesterday's high overall, and we'll see what price action delivers here. Maybe wishful thinking. Without this break of structure, then I would have a lot more doubts, even though this candle did close above here. But just for, let's say, pure mechanics, just sticking to my desired profit target would likely be the way to go, as I'm putting more pressure on myself to deliver here to this location. But with all things in place, it is a high enough probability to be worth a try. Just means I would be sitting in the trade much longer than I would prefer. And then we'll come over here to the 5-minute chart. So here you can see the swing. Actually, we'll come to the 15-minute chart first, and then we'll go down to the 5. Okay, so here on the 15-minute chart, here we have this swing low here. Actually, there's the swing low here, and then there's a swing high here on the 15-minute. With that, we get price action here, opens up for the session to the sell side, consolidates sell side, and then here wicks through this low, taking out the sell side liquidity resting below this area. With that, that triggered a long idea for me. So entering, actually I entered in stages. So once that happened, once that sell side liquidity was traded into, I dropped down to the 5-minute chart. And here in this 5-minute chart, you can see there is a small fair value gap right here. In addition to that, here we get a market structure shift here to the buy side. Price pulls back, consolidates down here, and then delivers to the buy side, sweeping out the buy side liquidity here. Now, again, as I mentioned, this would be the ideal location to take profits for this trade. But as I mentioned on the 60-minute with the price action, seeing an opportunity to take a longer position. And if we break back out to the 15-minute, you can see here we are now trading into a 15-minute fair value gap right here. And this could be enough to send price back to the buy side and into new highs, and potentially here on the 1 hour chart, sweeping out the buy side liquidity above this area. There's also the potential to add here. Here being the range here, or the dealing range here on the 60-minute here. So seeing a return back to this level, this 145.5 level, would be equilibrium here on the 60-minute chart. If we see here on the 15-minute chart, the swing high here on the 15-minute is right here. So with an add, you could add here. It could add here as price traded into this fair value gap here. I'm looking at the 60-minute and wanting to see if an fair value gap will form here on the 60-minute. Right now you can see there is very little space here. If price came down here to this 110.164 level, which would be the high here on the 60-minute, I'd be open to adding to the position here, and may do that, may put an order in to do that here. 109, 210.9 is my stop. Ideally, I want to see a fair value gap form. Okay. And then limit order 110.164. Make room for spread, which is this plus 70.1. 110.234.1 would be the entry for the add. And I'll put the order in, and we'll see if an entry is given here. Okay. And I'm perfectly fine if no entry is given, if price just goes to target from here, as price has already traded into this 15-minute fair value gap here. But currently it's 11:30. So there's or at least with me, with these lower time frame fair value gaps. I prefer to trade off of the higher time frame, or the 4 hour or the 1 hour fair value gaps. These fair value gaps can be valid, but they fail more frequently than the higher time frame fair value gaps. So that's why I'm setting my limit entry based off of the 60-minute chart instead of off of the 50-minute chart. Or I could have added, technically I could have added here when this candle traded down into the fair value gap. And then if we take a look at my history for today, you can see these are the 3 positions that I've built up here in the New York AM session, and potentially one more position here, and then we'll see if price can deliver to target. If you'd like to know more, you can visit us at ontilttrading.com. Trade safe, trade together. We'll see you next time.